Hello everyone. This is the pre-market report video for 30th January 2023 in terms of Nifty and Bank Nifty. First, let's see what happened on last Friday. As most of us know, it was more disastrous than last Wednesday for Indian market. Nifty opened almost flat at 17,877, but it kept on sliding and hit the day's low of around 17,493 in the afternoon, then recovered some in the end. All because of this Hindenburg report, which made the Adani group stocks to lose near 4 lakh crore rupees, and as a knock-on effect, it drags the major Indian banks, especially the PSU ones. As a sector-wise, PSU banks dropped over 5% in one single day and private banks dropped over 2.5%. Regarding their debt exposure to Adani Group, we'll discuss in the later part of the video. So, is it all negative on Friday? Auto sector closed over 1% positive. FMCG and pharma increased around 0.5%. At the end of Friday, in one single day, FII net sold shares worth approximately 6,000 crore rupees and DII net bought shares worth approximately 4,250 crore rupees. So that's what happened in the Indian stock market on last Friday. I know there is no point for us to look at the global market and sentiment. However, I like to discuss quickly about what happened on US market, so it will be very helpful to understand the global sentiment, though it may not be useful today. Anyway, last Friday, US Department of Commerce released the two important data. First, US PCE price index data, then the second, personal spending. As I said lot of times, this PCE inflation is more important than consumer inflation on the Fed's perspective. Since the Fed chairman publicly confessed a lot of times that this is the one important gauge that he used for interest rate decision. For those who don't know, it's nothing but an indicator of the average increase in prices for all the domestic personal consumption. Even in the last FOMC meeting in last November, Fed chairman was not happy about this macro as it was always in the range of 6 to 7% for over 12 months. However, after the FOMC meeting, the data released in December month comes as 5.5%, which was considered as huge positive. And last Friday, the data for the December month, it comes further down to 5%, which was really a huge positive and made the investors very confident that Fed is going to increase very smaller rate hike, maximum of 0.25%. Then the second one, personal spending. On month-on-month basis, for the second straight month, it contracted, and for the December month, it contracted by 0.2%. This is also very important, since if there is a reduction in personal spending, then for sure it will reduce the overall inflation. So the overall US market itself very positive, but however there too the last half hour profit booking trims the rally. In the end, Dow Jones closed almost flat. S&P 500 increased marginally by 0.25% and Nasdaq increased by 0.95%. Both dollar index and 10-year treasury bond yield were closed roughly at the same place as last Thursday. I mean 101.7 and 3.5% respectively. Then regarding oil, it has been having its dream run lately, and one of the main reason for that was due to the expectation of demand increase in China. But for the January month and March order supply book shows all the increasing new demand from China was and will be supplied by Russia. This unexpected Russian oil supply made the oil to drop over 2%. Thus, on Saturday, WTI closed at near $79.5 per barrel and Brent crude closed at near $86.5 per barrel. Coming to Indian ADR, because of the bad Indian market, there too banks crashed over 3% and IT crashed near 1%. Regarding SGX Nifty, on Saturday morning it closed at 17,719. So it's kind of indicating 30 points gap up opening. So that's what happened in the global market. Now let's move on to the India related info. First one, I like to talk about banks. I mean both weekend and even on Friday, throughout, there was a debate going on about who gave and how much loan to Adani Group. For info, Adani Group as a whole got the debt of around 2 lakh crore rupees. Now, according to Jeffries and CSLA rating, in that 2 lakh crore rupees gross debt, Indian banks are exposed to 40% of it, which means 80,000 crore rupees. And in that, 20,000 crore rupees debt is with private banks, mainly with ICICI Bank and HDFC Bank, and the remaining 60,000 crore rupees debt is with PSU banks. So far in the last 2 days, of the 3 large banks, only SBI chairman comes out and gave the statement. He said that SBI's Adani exposure is less than what RBI's limit, and till last month they are getting proper interest payment, so they are not worried about at all. And also Jeffries released the report that the whole Adani Group debt will account for only 0.5% of total loans in Indian banking sector. Then in that Jeffries report, they also mentioned that Bank Nifty at present is trading at 13 forward 12-month PE ratio compared to Nifty's 18 forward 12-month PE ratio. And thus they think Bank Nifty is overweight and they are bullish about it. Then again on last Friday, RBI released their bi-weekly report that the Indian bank loan grown at 16.2 and the bank's deposit grown at near 10%. So those are all the info about the banks that floats during the weekend. But honestly, I don't know how it's going to play out today in the stock market. Then about quarterly results, Bajaj Finance released their earnings and they did report at the highest ever profit. I mean, on year-on-year basis, it increased over 40% and their net interest income increased over by 24%. They too marginally beat the analyst estimation. As a summary, global momentum is good and it is really positive. However, today's market will be mainly focusing on Adani related info, impact and its FPO status. Again, last night, Adani Group released a 400-page report as an answer to this Hindenburg allegation. Is those answers sufficient and explain all allegations? I have no idea. So, we can expect some reactions for those. Now, coming to technical, both Nifty and Bank Nifty on the daily chart, it forms a 3 black crow candlestick formation. I mean, in the uptrend, all these 3 long black candles formed consecutively and closed lower. Generally, this pattern suggests that the market has been at a higher price for too long period and investors are beginning to compensate for it now. This is one of the strong reliable candlestick formation for bearish reversal indication. Then regarding moving average, at present on daily chart for Nifty, it only trades above 200-day moving average and in all other cases such as 5, 10, 20, 50 and 100-day moving average, it trades below. So, as a moving average summary, it's a strong sell indication. In case of technical indicator summary, again it's a strong sell. RSI value was dropped near 35. Then in case of Bank Nifty too, the story is the same. Based on Friday's closing, Bank Nifty moves below 5, 10, 20, 50 and 100-day both simple and exponential moving average. So, as a summary, it too turns into a strong sell signal. Then about technical indicator summary, it's a strong sell, whereas RSI value dropped below 30 levels. Regarding options open interest analysis, for Nifty, if you see the change in open interest, there were very small quantity of put options added at 17,300 and 17,100. Whereas huge new call option open interest were added between 17,600 and 18,000. 18,000 is the point where the maximum nearby new call options were added and followed by 17,800. Thus, 17,800 is the immediate resistance today. Then, based on overall options open interest, comparatively 17,100 and followed by 17,300 got the maximum put options without any call option open interest. So, 17,300 is the support to look out for. Coming to Bank Nifty, based on change in open interest, huge new put options added at 39,000 and followed by 39,500. Then about the new maximum nearby call option is added at 41,000. So 41,000 is the strong resistance to break. Then based on overall options open interest, still 39,000 and 39,500 got the maximum put options without the significant call options. Thus 39,500 is the immediate support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this, as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.